Hi guys, this is Tal, Informed Trades Pro, managing the Saul Fund for Informed Trades. And I'd like to go over a trade I made with Saul this week. For those of you who don't know, Saul is an automated program I created that generates signals and automates the actual taking of the orders and the position sizing and risk management for those signals. And it's available at Informed Trades. And I'm also managing a fund for Informed Trades based on that program. And what I'd like to do is look at a trade I took Thursday, which worked out okay, not great, and use it as kind of a basis to review three topics, which is first of all how we take spreads into account when we trade. The second one is going to be scaling out, how we do that. And the third one is going to be a bit about correlations between usdJPY and Euro USD, as well as possibly the S&P and gold. So let's start by looking at the trade. So this is the 5-minute chart of the USDJPY, the dollar versus the yen. We're looking at the 28th of January, which is the previous Thursday, for those of you watching this now. And basically what happened, we ran Saul generates limit orders, and it gave us an order to go short right over here. And as soon as the market filled us, we went short, and as you can see, Saul was off by about 2 pips. The market went up and promptly went down about 13 pips, which could have given us a total of 11 pips in profit. Now Saul, one of the things Saul does is calculate where your stop is, and places the stops automatically, and then it can calculate position size automatically for you. And because it takes type stops, it's more of a scalping tool. It gives rather big positions. And we really got in with 6 micro lots that account, and as you can see over here, we got in 90.18. And got out at 90.12 for 6 pips, and we got out, with 4 micro lots out of the 6 we took in, which left two on the table. Now, as soon as that happened, that's like 2 bars in, I moved my stop loss order to above, to just about here-ish, which would have been right out of harm's way, except for the next topic we have to talk about, which is spreads. So basically what happened, the reason we didn't get this beautiful movement over here, which would have been quite a chunk on 6 micro lots, is because I forgot to take the spreads into account. Basically what that means is that when we go short, we're selling. We're selling, so we're getting filled on the bid. We're selling to someone who's bidding for a price, and when we're closing our shorts, we're actually buying. So we're always going to get filled in on the ask. And you have to keep in mind exactly what is the bid, what is the ask, and how does it look on our charts. So you can see I have both of them on my MetaTrader line. The upper line is always going to be the ask, the lower one is going to be the bid, and it always makes sense. People are always going to ask to sell at a higher price and bid to buy at a lower price. And basically what that means is that MetaTrader usually, or most platforms, will actually print the charts according to the bid, or where the last price closed, and it usually happens on the bid. So you're going to have candles on the bid. Your ask is 2 points higher, is 2 pips higher, and you need to take into account when you're getting out of a short, where the ask is going to be when the candles are going to form the pattern you're going to form. I didn't take that into account, and we really got out by we got shot out by exactly that 1 pip that I didn't take into account, and on that account we missed this movement, which is unfortunate but good to learn. Better to learn from your mistakes than not acknowledge them. Let's look on the positive thing of what happened with this trade, which was the actual scaling out. As in, assuming I would have gotten knocked out all 6 micro lots at that level, we would have had a much more substantial loss. Assuming that if the markets hadn't gone down and actually reversed or kept on going up, we would have taken quite a serious loss, which would have been much worse. As it is, we got out with a $1.50 profit, which isn't much, but it's not a loss, and it's better than break even. And that's the beauty of scaling out, which is really, really, really important when you're trading intraday. In my opinion, at least, when you're scalping, when you're looking for quick movements, you get in, you take profit, you sell out, close as quickly as possible to keep yourself out of harm's way, and move your stop. And that's exactly what I did. I closed 2/3 of the position, and I moved the stop so that no matter what happened, I'd still be in a small profit. And then if I was fortunate enough, or lucky enough, if my analysis was good enough, no matter how you'd like to phrase it, for the markets to move more in my direction, more in my favor, I would have made more money. But if it hadn't happened, which was the case, essentially, you'd get stopped out but with no serious loss. And I think scaling out, especially when using a system like this, which is really based on the intraday movements, Saul's designed to just look for quick pullbacks. It's really important to scale out and keep yourself out of harm's way all the time, and have enough in the market to be able to capitalize on any big movements that happen. But always minimize your risk. Minimizing your risk is really the name of the game. The final thing I'd like to talk about is why I kind of felt hesitant about this trade, and something that's been bothering me a bit for a while now, which is kind of the bizarre correlation that's been happening between usdJPY and the Euro USD, and I really can't figure it out, and it's been kind of offing my system for the last few weeks. So basically, the Euro USD tracks the dollar versus the euro, and usdJPY tracks the dollar versus the yen. And you'd expect them to be quite correlated, since it's the dollar on both of them. As in, if you'd go long one, go short one, essentially you'd be making a cross between Euro JPY. Now let's look what happened here. Here we see the dollar is declining. The dollar is declining. We can even zoom out a bit. Here, this is the usdJPY. So the dollar has been going down for all of the 28th. And look what's been happening on Euro USD. The euro is declining. The dollar has been going up. And at the same time that we went short the dollar on usdJPY, and the markets actually, said that's fine. The dollar was really gaining strength, and look what happened on GBP, the pound versus the dollar at the same time. This is where we took the trade. Right before that, the dollar had a huge rally against the pound, and really the yen has been kind of oddly correlated. It caught up yet on Friday. It finally kind of corrected itself, and still not that full volume, and then it's still not where I'd expect it to be. Comparing the dollar to everything else. And I guess part of that is because of the deflationary sentiment in Japan, expectations of them raising interest rates, their currency gaining in value. I guess it's just something that I'd like to point out. I use correlations a lot, especially between the dollar pairs, the USD, between the dollar and the S&P, between the dollar and gold. And intraday it works great, as in if you see a bar movement, a lower low made on gold, you can expect a higher high on the dollar, etc. As in, they're really, really closely correlated. They're a really great methodology to trade, and a very great way to confirm your positions. Let you know if you should cut losses, let your profits run, kind of give you a picture of where you are. And what I'm trying to point out is usdJPY has really been confusing these last few days, but still a very good tool, these correlations. Anyway, this has been Tal of Informed Trades. I hope that you guys gained something from watching this video. Be sure to visit us at Informed Trades. It's the Discuss Saul section. You can purchase Saul, read more about it. We have daily trading signals going on, as well as a wonderful community full of other traders sharing ideas. So come visit us at informedtrades.com. Thanks for watching. Bye, guys.